For more on the story, let's bring in Victoria Scholar in London. She's the head of investment at Interactive Investor. Welcome back to the program, Victoria. Now, last week we had the spending bill approved by Congress. Now we have this debt ceiling close to the finish line, but these are all short-term fixes, only up to December. How are investors taking in these developments given all the uncertainty that they imply?
Hey there. Yes, well, like you say, a lot of uncertainty in the markets, a lot of jitters. We've seen volatility in September and October as well. Now, yesterday, the markets took the announcement around the extension of the debt ceiling extremely well. The Dow was down around 450 points, but ended the session in the green. And we're seeing that positivity way across Asian markets, with the Hang Seng up more than 2%, and European markets are trading higher again. But essentially, it is a case of just kicking the can down the road. But at least this short-term default risk has been put to one side, at least for now. We know that Treasury Secretary Janet Yellen said that she would most certainly expect a recession if we were to see a default. Now, we have seen the debt ceiling raised 100 times in the past, so this certainly isn't an unprecedented event. Nonetheless, the risks are still high.
Right, that's on the fiscal side. Let's look now at monetary policy. Inflation remains above target, and this week we had some good jobs numbers from payrolls firm ADP. Plus, tomorrow we have the Labor Department's employment report. Can you give us your view on what the Federal Reserve might do with this data?
Yeah, so of course the Federal Reserve will be paying close attention to this week's labour market data, the private payrolls, as you mentioned yesterday, ADP beating expectations. We've got weekly jobless claims today and the key NFP report on Friday. We're expecting around 500,000 job creations. Last month was a very disappointing figure, falling much short of analysts' expectations. Now, that came off the back of a series of very strong reports. Now, where we are in terms of the labour market right now, we've seen about 17 million job creations since April 2020, when we're at the height of the pandemic, but we're still around 5 million jobs below that pre-pandemic level from February of 2020. So this is a real key gauge as to what's happening with the labour market. We also get average hourly earnings. Now, that feeds into inflation. So it'll be interesting to see whether or not we see a jump in those wages, and whether that could raise further concerns about the potential for rising prices and put pressure on the Fed to raise rates sooner rather than later.
All right, a lot of numbers to follow there. Thank you for helping us out. Victoria Scholar, Head of Investment at Interactive Investor in London.